Welcome back, everyone. Last week I started the video which covers part 1, which is the what type of insurance should I buy when entering occupancy stage of my pre-construction condo. This week's video will be covering the insurance components that I think most condo owners need to realize how important it is to review in your policy properly. If you haven't watched part 1, the link is below. Recommend to watch that first. For those who don't know me, my name is Catherine Lee. I've been an insurance broker for the past 13 years in Ontario. The goal of my channel is to help empower you with the knowledge about insurance so that you can protect what matters most to you. Let's see. In this video, we'll be answering the question, what coverages do I need? So before we begin, let's outline the main insurance choices that you should be aware of during pre-construction condo occupancy phase. That would include tenant insurance, condo insurance, vacant condo insurance, and the rented condo insurance. This was covered in the last week's video. Please watch that first. Today we're going to be covering important coverages that I think most condo owners need to check in their policy. Number 1, personal property insurance, aka contents. Number 2, liability insurance. Number 3, additional living expenses. Number 4, sewer backup endorsement. Number 5, overland water endorsement. Number 6, betterment and improvements. Number 7, condo assessment. Number 8, rental income. What does these insurances cover? I'm going to name a few coverages, and I think it's ideal for people who are renting or lives in a condo or a landlord of a condo unit. So, number 1. For tenant and condo policies, your principal home. This would cover your personal belongings like furniture, clothing, jewelry, desks, chairs. For simplicity, I typically tell my clients if I flip your unit upside down, whatever falls, because it's not attached to your flooring or walls, those are considered contents, which is your personal belongings. Now, for a landlord, this may not apply to you as much because it's just appliances that might count as contents. So depending on your contract with your builder, you should be responsible for appliances in your unit during occupancy period. Look, I get the response a lot. I don't know much. I don't need much coverage. That could be true, but your content limits will activate the following coverages. I would suggest you to watch to the end of the video to understand them all. Number 2. Accidents can happen anywhere, and that is why liability is very important. If someone is injured while visiting your rented condo or your primary home, you could be held legally responsible. Slips and falls can happen, and if they win the lawsuit, you as the owner of the condo may need to split the bill. If you're renting, you may need to cover medical expenses or legal fees if you're found liable for someone's injury. Now, look, no one's out there to get you, but accidents happen. If they can sue and win for whatever circumstances, you would wish you had the insurance to cover you. It offers invaluable peace of mind, ensuring that you wouldn't face financial hardship due to unforeseen circumstances. You could typically see $1 million coverage up to $5 million. If you're living in a big city like Toronto, I suggest you to get minimum $2 million coverages. Now, Number 3, additional living expenses. If the rental unit becomes uninhabitable due to the sewer backup, this coverage can assist with temporary living expenses. It may cover costs for hotel accommodations, meals, or alternative rental arrangements until the unit is restored and safe to occupy again. This is a very important coverage. So imagine there was a claim in our office, which many people could never imagine until it happens. There was a pipe burst on the 4th floor because there was so much grease built up in the pipe due to people's misuse and thinking the pipes can handle it over time. It bursts on the 4th floor, breaking through the walls. As you probably know, waste is in there as well. All the number 2s that people took that day was in those pipes. Get my drift? So imagine that pipe burst through your kitchen, destroying your floors. How long will it take to clean it all out to replace everything that got damaged in it? Would you be able to sleep on the bed that's covered in grease and feces? I don't think so. Now, having the insurance would give you an allowance to move out when it's deemed unsafe to stay. Typically, I would recommend everyone who has tenant or condo insurance, please review this limit because it's usually 20% of the content limits. If you're buying $50,000 contents, then you're looking at $10,000 additional living expense. If you're living downtown Toronto, $10,000 may cover one bedroom for $2,300 a month. That could just be 4 months. If you think that's not enough, so best to increase that limit. Number 4, sewer backup covers against damages and losses caused by a backup or an overflow of a sewage or wastewater. When a sewer backup occurs, wastewater can flow back into the unit through the drains, toilets, and other plumbing fixtures, resulting in a significant damage to the tenant's personal property. So sewer backup coverage helps tenants cover the costs associated with cleaning, repairs, and replacement necessary due to the damage caused by the backup. You're looking at the expenses like cleanup and restoration. This coverage helps pay for expenses relating to the cleanup, sanitization of the affected areas. It could also include the professional cleaning services, disinfection, and deodorizing to restore the rental unit to its pre-loss condition. Now, most of the time, the sewer backup limit should match your content limit. I usually recommend minimum $50,000 sewer backup because we've seen condo cases costing over $30,000 in damages. So best to have more coverage than less. Overland water coverage in tenant insurance is a specific type of insurance that provides protection for renters against damages or losses caused by water entering the rental unit from external sources such as heavy rainfall, overflowing rivers, or melted snow. This coverage is designed to help tenants cover the costs associated with water damage resulting from such events. Remember in 2013 we had that heavy rainfall causing a flash flood in Toronto? Well, we used to have that sewer backup as water coverage, but now they're breaking into two parts, sewer backup and overland water. Due to the recent high water claims we're getting across the board, insurance carriers is now charging more for the premiums. So just a few years ago, we saw the news mentioning that the center island was getting flooded because the lake was all-time high in the last 50 years. This affected a lot of homes built by the water. For those who haven't reviewed the policies in a long time, especially since 2016, you may want to review your home policy and make sure the overland water is in the coverages. This coverage is the same idea as sewer backup. It usually matches the content limit. So if you're buying $50,000, then you'll have max $50,000 for overland water. Number 6, betterment and improvements refer to upgrades, modifications, enhancements made by the condo owner for their unit to go beyond the original specifications and features provided by the builder or developer. These improvements could include renovations, additions, or enhancements made to the interior space, fixtures, finishes, or other elements of the condo unit. Those are the beautiful spotlights, chandelier added to the beautiful entrance, maybe the marble wall with the electrical fireplace to make it look like a house, or a custom-built walk-in closet. Whatever additions you have added to the unit to enhance it, making it appealing costs money. So do you want that to be replaced? Most likely yes. Therefore, I highly suggest for you to review this limit and see if it makes sense. Now, look, it's hard to gauge on how much to replace because let's say you're buying a 30-year-old condo completely renovated. How do you know what condition the insurance carrier would repair it to? You didn't buy a 1990s condo. If you feel like they put in at least $50,000 or $100,000 in renovations, that's how much you should be insuring yourself to. Number 7, condo assessment. This protects the condo owners from unexpected special assessments imposed by the condominium association or corporation for a certain loss or repairs that exceeds the limits of the master insurance policy. Condominium associations or corporations typically have a master insurance policy that covers the common areas and the building structure. However, in certain situations such as significant loss or extensive repairs, the coverage provided by the master policy may be insufficient to cover all the costs. When this occurs, the condominium association may levy a special assessment on the condo owners to make up for the shortfall. In short, splitting the bill among the condo owners in the building. You're probably saying, say what? Let's say your pool flooded the entire main floor, hallways, elevator shaft to the basement. The damage cost $2 million to repair. The condo master policy will only pay $1 million to repair. The remaining $1 million would be spread among the condo owners if the condo property manager doesn't have enough reserves to pay for it. If you have 300 units, you're looking at $3,330 per unit. If there was 100 units, you're looking at $10,000 per unit. Those are the simple calculations that meant to be used as an example only. Number 8 is rental income. Protection provides financial compensation to condo owners who are renting out their units, but in the event of a covered loss or damage that renders the unit uninhabitable and results in a loss of rental income. When the condo owners rent out their units to the tenants, they're relying on the rental income to cover the mortgage payments, maintenance costs, and other expenses. However, the unforeseen events, such as a fire, water damage, or severe weather, can cause significant damage to the condo unit. Rental income coverage helps mitigate the financial impact of such situation by reimbursing the condo owner for the loss of rental income during the time required to repair or restore the unit. We explored various aspects of tenant and condo insurances, including coverages for the physical structure of your unit and personal property, additional living expense, and liability protection. Getting the insurance policy is the easy part, but you need to spend some time to understand the policy limits, deductibles, and exclusions to ensure that you have the adequate coverage that meets your specific needs. We also have highlighted the significance of additional coverages such as sewer backup, overland water, condo assessment coverage, betterment improvements, and rental income for rented condos. These additional coverages help address specific risks and potential financial losses that may not be covered by your standard policies. Remember, each policy is unique, so it's crucial to carefully review and understand the terms and conditions and coverage types. Don't hesitate to ask questions and seek clarification to ensure you have the comprehensive understanding of your policy and limitations. By securing a condo insurance, you're actually taking a very proactive step towards protecting your investment, personal belongings, and financial well-being. Whether you're a condo owner or a tenant, having the right condo insurance coverage in place can help provide you the peace of mind that you deserve. Now, thank you for watching this video, and we hope you find it informative. Remember to consult with an insurance professional to assess your specific needs and obtain condo insurance policy that offers that protection. Stay protected, stay informed, and enjoy the peace of mind that comes with having condo insurance. Bye for now.